afternoon. Thanks for tuning in. You're watching us BQ on Bloomberg Quint Live. I'm Navneet Saluja D'Souza.
Hi Navneet, I'm Alex Matthew. Well, if you've got questions in equity, then you know where to send them to us on any one of our social media platforms. Or you can also call us on 022-4540-4141, or you can mail us on askbq@bloombergquint.com, as some of you have already done.
All right, but before we get to the individual queries on the show, let's tell you what's happening with the markets. It's not been a great start to this expiry week. In fact, Thursday's closing in itself was in the red. So right now, all your key indices, Nifty, Sensex, Bank Nifty, all of them have seen cuts of nearly close to 1%. And even the sell-off has been seen in the broader market. So it's selling across the board this Monday, 1% lower for both mid-cap as well as the small-cap index. In fact, the volatility inched higher. It's almost at 3-year high India VIX this morning, this afternoon, 5.5%. It touched the level of 24. The sole gainer in today's days, the ID index. So the Nifty ID has seen some bit of support coming by 0.5% higher for that one. Let's just pull up the Nifty contributors list. That's going to tell you which are the stocks which have dragged the index lower. And topping the list is Reliance, which was providing support to the index on Thursday. It was up 3%, is dragging the index by almost 27 points. Your other heavyweights, HDFC, ICICI Bank, also trading in the red. Some bit of support, as I mentioned, is coming in from the ID pack. TCS, Infi, Wipro, all of them trading in the positive territory. The oil marketing companies have come under pressure after the crude oil prices have spiked. So something like HPCL and IOC have seen cuts of almost 4 to 6%. I think that both the stocks are almost at day's low right now. The other losers in trade today are Jet Airways. The stock came out of the F&O ban, which provided room to the F&O traders to create fresh short positions. That's down 13% in trade, and it's not good. It's not a good going for Dewan Housing. It was down 8% on Thursday, down another 8% in today's session. And also something like Reliance Capital, that's been falling in the last 3 to 4 sessions. In fact, there's been some down rating which has come in for its debt instrument. Precisely that's the reason why the stock's seen some bit of pressure. On the gaining side, few stocks moving on back of numbers. DCB Bank numbers came in last week, and today the stock's seen good move of almost 3%. Tata Coffee came out with the numbers. Tata Coffee is a subsidiary of Tata Global Beverages. Good set of numbers, and we are seeing good move coming in on Tata Global also. And 5 Paisa Capital, the stock last Thursday was locked in upper circuit with gains of 20%, and today also it's seeing good gains. The company turned EBITDA positive for the quarter gone by. And just to mention of Rane Group stocks, most of them were locked in upper circuit on Thursday, and today once again there is some buying interest which is emerged. So Rane Engine, Rane Holdings, Rane Madras, and also something like Rane Brake, all of them are seeing substantial gains in today's session, Alex.
All right. Well, on that note, let's get our two experts in for the day. We've got Jignesh Mehta of kiranjadhav.com and Parthiv Shah of TRACOM Stockbrokers to answer all of your questions today. Welcome to the show, gentlemen. I do want to start with the mail queries, which I mentioned we already have. We've got AK Gupta, who's written us a mail, and he bought shares of Idea Cellular at IPO, and therefore is holding shares of the merged entity Vodafone Idea, which, by the way, is currently languishing around that 17 mark or so. What he's wondering, Parthiv, is if he should subscribe to the rights issue at this point. We're just coming off the back of the Reliance earnings, and therefore Reliance Jio numbers have also come through, and seemingly that the ARPUs are under pressure, the average revenue per user under pressure, reflecting their desire to get a larger, shall we say, chunk of the pie. So pricing pressure is not going to go anywhere, right? What would you say to somebody who's holding Vodafone Idea?
What I would suggest is that at 12.5 rupees, where even the promoters are aggressively subscribing to it, go ahead and also subscribe to the rights, and not only subscribe to the number of shares that you're going to get allotted, but try and do a little bigger application such that if you get these additional shares at 12.50, and right now current prevailing prices are at around 17 rupees, then I think it won't be a bad idea at all. And our sense is that the Vodafone Idea, the combined entity, and of course all the negative news currently seems to be in the price, but the combined entity, for example, I think a lot of networking gear which has a lot of synergies, say for example 70,000 sites could be reallocated because of duplication, which is very, very beneficial to this company, because once that happens, I think we see network synergies of around 6,000, 7,000 crore, and this will take time, but I think our sense is that the way pricing is prevalent right now, I think in next 2 to 3 years we'll certainly see the ARPUs inching up to 160, 170 levels, and whenever that happens, I think we'll will see all these companies getting re-rated. So I think I would suggest if you're a 2 to 3 year horizon investor, subscribe to the rights, do some additional application, get your cost down, and then wait for the next 2 to 3 years.
Oh, interesting call.
Okay, let's move on and just take some more queries. The next one comes in on Jamna Auto. If you could just pull up the chart of that one. Rajesh Babu writes to us on YouTube. He's holding the stock at a price of 73 rupees, and now he wants a long-term view, but he also wants to know if it's the right time to average. So it's right now somewhere about 59.60. Let me just first ask Jignesh if it's the right time to average this stock. Jignesh, what are the charts indicating? The share had fallen from those high levels, but of late we've also seen some bit of recovery.
Of course, off late when I see the chart has recovered from 48 rupees to it made the high of 65, and then it is in consolidation. Currently, it is consolidating in the lower band of the channel. Still, it is a channel. I think stock is getting bullish. And if the falling trend line is broken away, that is the level of 64 and above. So if 64 is broken on the upside, the stock could see the level of 76, 80 pretty soon. So I think it is quite bullish, and currently it can be bought with a stop loss at around 56. So current levels are 59, 56. 56 should be the stop loss. Little early to buy, but of course it can be accumulated till the level of 64 is breached on the upside.
Okay, and Parthiv, any fundamental view on something like Jamna Auto? If I look at the returns, at least in the last 2 to 3 years, the stock's given good returns.
See, like in Jamna Auto's case, no doubt, I think this is a very good prospect. It was a prospect when the CV segment was doing well because it supplies these jumper coils to a lot of the CV segment players. And now I think what we can apparently see that year on year, I think the volume growth has not taken place in the CV segment. We are confident that overall on the longer horizon, this will do well. But I would suggest that, for a new fresh entry, wait on the sidelines, don't enter at these levels. Probably in the next 2 to 3 months, you might land up seeing the same share available 10-15% lower in any sort of mid-cap sellout. Because all the valuations of these auto ancillary companies are getting derated with the automotive sector not doing well. So I think wait for a better entry point. It's a good company to be invested into, but at better decent levels, which are lower than current market trends.
Okay, let's try and put all of these stocks, perhaps the last 1 year performance on the same chart so as to give a comparative when I take the query to Parthiv. Supreme Industries, Nilkamal and Astral Poly. These are all stocks that have been identified by Shiva Kumar, and he's talking about them, Parthiv, in terms of plastic or a plastic play. And while these companies definitely do obviously deal with plastics, their output is a little different. So I do not know if you can compare them. But having said that, which according to you, based on the fundamentals, is the best for a long-term bet?
See, out of the 3 stocks mentioned, no doubt Astral Poly had been a very good bet, but now at current levels and valuations is prohibitively expensive, and it will have to deliver stellar growth numbers to justify the current valuations. But I think we're extremely bullish and confident on Supreme Industry. It's a Taparia Group company, age-old name, and I think fantastic brand, and they have been continuously increasing their capacity through debottlenecking some new greenfield projects. The balance sheet is not at all overly leveraged, and I think their internal accruals and cash generation is so strong that takes care of the entire debt reduction and also the expansion. So I think Supreme Industry, which is also a beneficiary of GST due to the organized nature of its business, I think should certainly do well, and valuation wise at 18 times FY21, it's not very expensive. So I would go with Supreme Industries.
Okay, Parthiv likes Supreme Industries among that lot. Supreme, Nilkamal, Astral Poly. Let me move on and take our next query, which comes from Srinivas. He's written a mail to us and he wants a view on FMCG companies like HUL and Gillette. But his time horizon is actually the next 6 months, and he's looking for a minimum return of almost 15%. Well, clearly, Srinivas, these are safer bets, so to say. But let me just take this query to Jignesh. Jignesh, would you advise Srinivas to put his money in these safer stocks like Gillette or HUL, considering in mind that the volatility is high and we're going to be getting election result going into the month of May towards the end? So for the next 6 months, should he be parking his money for a 15% return on something like HUL or Gillette? If not, if you have any stocks, you can advise him.
Of course, out of this two, I think Gillette is something I would recommend to go and buy, but not HUL, just because HUL is seeing lower top and lower bottoms from last 2 months. It is something unusual, but the first time it has broken the short-term support line as well. So HUL has lost its sheen, but of course Gillette, which has seen great amount of buying from 1600 level, 6600 levels to 7,800 now, and stock is going into little of correction. I think the stock can be bought in the mode of accumulation, right, with the stop loss at around 7,200. I think this stock has a great chances to go up because it has gone out of the channel, and the breakout is perfect with a good volume as well. So Gillette is something viewer can think of.
Okay, let's take Raveen's question. Raveen on Facebook is asking about, I think, something that a lot of retail investors will be, Parthiv, a little, well, sometimes wary about, but also lured towards, if you can say that. Jet Airways, it's seen a sharp correction for the various reasons that have played out over the last couple of weeks and perhaps the last month or so. Would you recommend, so he's saying if it comes to levels of 120, should he consider entering at that price? Or would you rather say that it's a little too risky and wait till there is a little stability or clarity as to where this is headed?
See, Alex, if you remember, always while talking on the aviation stocks, I had always given an avoid call on Jet Airways, even when there were like suitors like Tata Group wanting to talk out to bail out this company or buy stake. I had just said that, let the real news come out and let us all know that the owners have changed. Only then one can give a call to buy. Till then, I think anything can happen. And, from there, probably the stock has really halved. And today, I think it's down 50%. And still, I think there is no hope. All the operations are grounded. And the biggest key beneficiaries of this is Interglobe Aviation and SpiceJet, and Interglobe Aviation has been a stock that we have been continuously recommending because now they will get even better pricing power. No two ways about it. This entire industry now has these headwinds in terms of oil reaching $72 and aviation turbine fuel is going to go up. So nonetheless, I think I would still avoid Jet, and probably there could be some spikes based on rumor mongering, but that is not what retail investors can do with their best ability, and keeping a stop loss is always difficult. So I think unless and until one wants to keep a stop loss, I would still suggest it's best to avoid this count.
At all, Parthiv, you're suggesting to stay away from Jet Airways. Just for the benefit of our viewers, it is out of the F&O ban. It's been heavily traded on the derivative side, which is actually given a room to create fresh shorts in today's session. So just be careful if you're initiating any sort of trade into Jet Airways. Okay, since we're on the topic of Jet, SpiceJet, Krish has sent us a message asking if we can ask our experts to give a view on this one. He's holding Spice at a price of 87 and he wants a one-year technical view. Okay, it's a long-term technical view. So, Jignesh, if somebody is holding around the levels of 87, sitting with good amount of money, 130 is the current market price, would you advise him to book his profits, or he can just stay put into this investment?
I think I would recommend to book profit, just because from the 87 levels this stock has bounced back, and look at the current prices. It is already trading at around 130. It has seen the high of 150. Now such a kind of a move that stock is not not acquainted to see in the earlier past as well. So when stock gives such a big move, I think it is a time to at least book a profit. Stock is although bullish, but I think some consolidation cannot be ruled out. So why to invest our money if stock goes into the consolidation like this? So it is better. A viewer can think of booking his profit at current levels.
Okay, well, that's the call on the technicals, at least for the next year or so. We've got a long-term query from Emil on the logistics space. Parthiv, this one's for you. The question is about all cargo logistics. Emil is holding at levels of about 143. The stock is trading at 116. And it hasn't really done very much over the last several months. In fact, it's hovering around that same level. In terms of the fundamentals, though, would you recommend holding on to this counter, perhaps adding? A lot of people had, expressed a lot of positivity with regard to this space, even perhaps a year and a half back.
Unfortunately, the numbers that All Cargo has been rolling out in terms of the volume growth, in terms of the margins, haven't been the best, and I think that's the key reason why the stock has continuously underperformed from all its highs. And I think still I believe that next 6 months will be extremely challenging for such players, where I think we are seeing slight slowdown in the economic cycle, which will probably not help the cause of such logistics plays, especially in terms of their volumes. So I think inherently very selected companies in this space has done well, and I would still prefer a stock like say Adani Port, where I think the volume growth has been quite consistent, and also I think the complexity of their port helps them to kind of manage different products in logistics space, and also they have touched almost 200 million tons of port handling capacity, which is sizable chunk, and such are the companies which will benefit from scale and whenever the economic cycle picks up. So I would suggest a switch from All Cargo to Adani Port.
Let's move on and take Mayank Saraf's query. He writes to us on YouTube. We just discussed Rane Group stocks in our market check, and Mayank is asking if he can look to buy the Rane Group companies for longer term. In fact, all the 4 listed entities have been seeing good amount of gain. Some of them are trading at their 52-week high. Parthiv, let me come to you. Any specific reason why the Rane Group companies have been inching higher in the last 2 trading sessions? And also, if you could advise our viewer, are they good companies to invest from a longer term horizon?
See, frankly speaking, the entire Rane Group pack, Rane Holding, Rane Engine One, Rane Brake Lining, all of them have been doing very well of late. But frankly speaking, there has been no fundamental change or trigger of late. There could be a buzz about this entire group being bought over by some other auto ancillary play. That is still rumor mongering, so nothing can be certified. But we saw a spate of upper circuit last session, and today also we are seeing these stocks buzzing. I would certainly not recommend these stocks at these high valuations, because some of the stocks have not delivered well in terms of the numbers, especially Rane Engine One. I think there have been some losses also. It's a good group. It's a very old group in the auto ancillary space, and as I mentioned, that the auto ancillary space might not be buzzing with the auto sector slightly struggling. So I would not suggest, rather somebody owning these stocks. I think with such rallies, it won't be a bad idea to book out some profits. So no new entries in these stocks.
All right, speaking of counters that have seen a recent spike, let's pull up Adani Green Energy and look at the last month or so. You'll see a significant spike in this counter, as much as 27% increase in the price over the 28 in fact percent increase in the price. We've got Rangarajan Balakrishnan, who's wondering whether to make a fresh entry, Jignesh, for the next 6 months. Would you advocate a fresh entry?
No, at current levels, I don't advocate fresh entry just because stock has moved a lot. As you said, 28% in such a short span is a great move from stock like this. And if you enter this stock at current levels, your stop loss is around 38 rupees, which is a support line, recent support line for this counter. So which is very far away. And I think risk to reward ratio doesn't match either. For this stock, I also can see 49.50 level as a barrier for it. So stock can, with the current momentum, it can go to 49.50, but staying above 49 or 50 level is, I think, a little difficult for the counter. But if it stays 49.50, then we can freshly look into the chart for the bullish signal. Currently, I think avoid is the best.
Okay, currently avoid, but if the stock stays above those levels of 49 or 50, Jignesh suggests you can look in for a fresh entry. Our next query on Facebook comes in from Raveen. He had a query on Jet, so Parthiv has already addressed that. Fundamentally, at least, Parthiv is suggesting stay away from it. So let's just pull up stocks like Ashok, Leyland and Tata Motors. He's holding some position here. Jignesh, I'm going to come to you. He's holding Ashok Leyland at 92. Currently, the stock is 93.5. He's holding Tata Motors at 229,000 shares of both these companies, and right now it's 237. So he's making some bit of money. He wants to know if he should be booking out or he can stay put. What are the charts suggesting?
I think for both the companies, he should stay put just because if you see the lower tops and lower bottoms has been over for Ashok Leyland. The stock has started moving upwards. Not only that, it has started making higher bottoms recently. Yes, with such a stock which has seen lower tops and lower bottom for more than 1 year, it is not going to be easily easily come out of those levels. But I'm sure after some consolidation, Ashok Leyland will again start giving the fresh moves on the upside. The stop loss for Ashok Leyland should be placed at around 85 some levels. Counter is currently trading at 93. Keep stop loss at 85. Hold it for a longer term, at least 1 year, view. I think this stock can easily go to 110 level, which is its first barrier. If it takes away that 110 levels, the other levels also opens up. For Tata Motors, it has already seen a great move, and stock can definitely go into consolidation very soon from now. But I think this is a safe bet. With Tata Motors, your stop loss should be placed at around 210 levels. The targets are very high. The first falling trend line that comes for the Tata Motors at around 280 levels. So I think both these stocks are very safe, looking into the mind that both have completed its down move recently.
You know, speaking about Tata Motors, Raveen, I would encourage you to have a look at the story that is currently on the website as to why, the 5 reasons why Tata Motors has done particularly well, in fact, surged 50%. In fact, if we were talking about this only a couple of weeks back or 3 weeks back, we wouldn't have been saying what we're saying as of now. It is this year's best performing Nifty company, and you should have a look at the reasons why it has potentially done so well.
Okay, that's Tata Motors. We also talked about Divan Housing as a counter, which has been falling in the last 2 sessions. Today, it's down almost 8% in trade again. So a lot of queries are coming in. I'm just going to club and take a fundamental view on this one. It's down over 8%. Parthiv, what's going wrong with Divan Housing? It's fallen nearly 17 to 18% in the last 2 sessions. If somebody is holding the stock, what would your advice be?
See, Nomit, very frankly speaking, the only reason why we saw a rally in Divan Housing Finance was because of the names of the various suitors which were doing the rounds. Initially, it started with the Piramal Group, then there were talks about Tata Capital, and I think after maybe a week or so, the stock did rally right up to levels of say 170, 175, post which I think nothing has so far materialized, as a result of which I think a lot of positional traders are trying to exit this bet. And also recently we saw some sort of downgrade in terms of its bond holdings. So I think that's another reason why we are seeing the stock reacting. But as such, I think this stock had gone long based on traders' position, and now they seem to be unwinding very heavily with no suitors announced or no one coming to bail out. So I think I would avoid these counters, because in NBFC space itself, there are a lot of quality names to play with, and which could be better long-term investment bets as compared to someone like this, which are at the mercy of somebody bailing it out.
Parthiv, without necessarily going into the details of each of these counters, I think Shalom is looking for your approval of the stocks that he has chosen for his portfolio for the next 5 years or so. He's talking about First Source Solutions, HG Infra, Delta Corp and Radico Khaitan. Should he go ahead with this list, or should he make amendments, or should he amend that list?
See, Delta Corp and Radico Khaitan make good sense. Hold on to these 2 names. But for the other 2 names, I have some apprehension. So what I would suggest is that if you want to stick with the mid-cap picks, then go with JSW Energy. We are very upbeat on the power sector over the next 3 years. And second stock would be from the cement pack, which is Ramco Cements, where I think we feel that with the 21 million ton cement capacity and with EBITDA by ton of about 1,000 rupees per ton, I think this company can do exceedingly well over the next 2 to 3 years.
Okay, the next one comes in on Karnataka Bank. One of our viewer wants a short-term view on this one. Let's just pull up the chart and see what it's done in the last 1 month and what it's doing in today's trading session. It's at 132, down almost 2% in trade, and in the last 1 month, not done too much actually, it's just about flat to positive. Jignesh, on the chart, what would you advise on Karnataka Bank?
I think when Karnataka Bank was trading at around 120 levels, and when it broke that level, it was inverted head and shoulder pattern that it formed, and the target for this pattern was around 145. Now look at the stock; it is turning down from 140 levels. I think some consolidation cannot be ruled out in short term. So if viewer wants to look at this counter, he should look to buy it at around 125, 130 some levels. So I think stock should correct and then it can be bought. Currently, it is better to avoid this counter.
All right. Well, it's that time of the show to slip into the rapid fire segment. Remember, this is where we try and fit as many queries as possible. So just a quick reminder to both our guests to keep their answers as short as possible. But as well, clear as possible, shall we say. Let's take Abhijit's query. Two counters, Parthiv, Bodal Chem and Rane Industries for the long term. Would you recommend a fresh entry?
Not really for long term because these are like cyclical plays, so one has to play out the cycle well. So I would avoid these counters for long term.
Okay, Jignesh, this one's for you on Adani Power. Krish wants to know what to do with this investment. He's bought with a time horizon of 6 months at a price of 40 and it's currently at 52. What should he do?
I think keep the horizon for not only 6 months, keep the horizon for one year. Stock is looking really very good. 44 should be the stop loss, and 80 some levels should be the target for 1 year.
Okay, Parthiv, something like a Hoodco, would you recommend a fresh entry? Kunal wants to know.
See, not really. I think this is not the NBFC that we like.
Parthiv, from the next 5-year perspective, would you advise somebody to put their money in Himmat, Singha Seed or Cosmo Films?
See, yes, certainly. Himmat Singha Seed for next 3 to 5 years looks a very good bet. Cosmo Film for a horizon of 1 or 2 years, I believe, is a better bet.
Okay, Nilesh wants to know about Subex. He's asking whether he should consider buying on every dip, Parthiv.
Not really. We are not very happy with the fundamentals that Subex is good.
Okay.
Jignesh, view on TVS Motors, bought at 480. What are the charts indicating?
Well, for TVS Motor, I think it can be bought and with the stop loss of 500 some levels. Target should be 544 or 550.
Okay, Parthiv, for obvious reasons, people have been a little wary of gems and jewelry. But having said that, would you recommend a name in the space? Voice of the Lamb wants to know for the next 5 years, what would you pick?
I think Titan is the best name. A little expensive valuation, so I would suggest staggering entry. Buy it in parts on every decline.
All right. Well, that's a comprehensive Ask BQ, if I can say so myself. Thanks so much to Jignesh and Parthiv for helping all our viewers with their queries. That's all we have on this edition of Ask BQ.
But remember, we're just a tweet, post or a call away, so please keep your queries coming and we promise to address at least most of them through our shows. And for all previous episodes, visit our YouTube channel or our website bloombergquint.com. Stay tuned. Up next is Power Lunch.